Goodinvesting.com Thursday, everybody. How's everyone doing today? So I want to take a little victory lap on Europound here and also give you some ideas if you were persistent with top picking this. Potential targets with a few speed lines. I call them magnet lines. Someone asked me, can I teach them how to do it? And it's really just using your imagination and from charting and looking for different angles. Of course, major formations, and I designate this a megaphone where you have a broadening top. So the throwover held intraday right here after the throwover. Then it ate into it yesterday at the close, but couldn't close under 20. And this rally was about between 61.8, 78.6, but this candle was the breakdown. Okay, under 90.20. We should not be above 90.20 if this thing is going to fulfill objectives to the downside. So you have some stuff here at 89.20 to 89. And I remember when Andre was talking about this, he had a default target at about 88.30. I have a speed line coming in here. And then you have this 87.40 level, and actually 61.8 is going to be about 87. And we all know 86.50 was the big pivot zone for when it turned good. I guess you could call it 86.80. But, you look across to your left, 86.75, this low here, 86.55. So, we could even, take out the 87 handle by a little bit. But that, I don't want to get ahead of myself. I don't think we're going to get this speed line. It's pretty radical. But if you want to take a screenshot, if you're short, there you go. Good morning, Claudia and Ping Pong. How are you doing? Keep it over the net. Okay, so a couple other things I want to talk about before I hand it over to Blake is Dixie. Dixie had a chance to try and turn good. It's, mixed. If we start taking out this line, this could be, even a right shoulder, but I'm not ready to get bullish a dollar. I still think there's a chance we get one more shot down here. Yen is acting pretty tough, okay, trying to hold the 61.8 level. But if we're going to get, and I do want to cover this, the S&Ps, we are underneath the 2-week off number in S&Ps. Here's your weekly. So by tomorrow's close, a 2-week reversal come in at 29.86.10. And what do I mean by a 2-week reversal? That means the market has a memory. The memory's to the left. And from this week, you just count back 2 candles, see where it closed. And if we close underneath it, it's a 2-week reversal. You could use that on all time frames, looking for reversals, candles counting back 2 to reverse would have to occur. Everyone with me? Hello, Raul, Renee. Okay, so the S&Ps, really what I think would seal the deal was see how we held this 29.60 level here before the last push up. And I'm not saying that we can't go again, but 29.60 I think is going to seal the deal. That was a previous high before we got this sell-off in May, and came right back like a champion, stalled there, held there. We take it out, there's air pockets underneath in the S&Ps. Okay, everyone with me on that? And something new that I did last night is in Aussie Kiwi. I stepped into it, didn't buy the bottom, bought it at 104.24, but I'm not sure if it was central bank action or whatever, but this candle It would be more constructive if we got back above the 61.8 level, which it tried to hold for a few different rallies. And I don't rule out a 78.6 test on this, which will come in at 103.72. I think there's still a chance that we get something like this from wherever the low comes in. So this was what, 10, let's call it 103. So let's call it 4. So from here, there is a potential for 108. So Aussie Kiwi, after all of this consolidation, after trying to hold the 50%, after trying to hold the 61.8, and this was a nice pop on the 61.8, and see how it tried to hold it again. So all the 61.8 longs are gone, and giving it a shot down here. And that's something else about EG. People are saying, why was I so stubborn? It's because there weren't any people short anymore after this happened. Most people, once we blew through, 90.10 was the prior week high up here. Once we blew through here, I don't know. There were no stops, right? I mean, there could have been stops above here, but this is like a new recovery high. So all the shorts are gone. And what I'd be looking for now is a stop hunt under this low, which is 89.60, and coincidentally the 2-week off numbers around 89.55. I don't know if we could accomplish that this week. We have 24 hours, but your first stops are here. I'm sure there's a lot of sell stops under 89.5. I'm sure there's some here under 89.20. I'm sure there's some here. I'm sure there's some here all the way down. And maybe the grand prize is taking out stops down here at the 88.28 level. Of course, there are going to be stops all the way down, but I think this is set up for some pretty good long liquidation because, when it comes down to it, most people are more bearish cable because of Brexit than they are the euro. So let's see how this plays out. I'm going to try and be disciplined and date this one for a while because I sure had to court it to get the date. So Blake got a real nice move in the gold yesterday. I really thought that we would finally get this breakout. Looking forward to seeing your symmetrical triangle and see how close it got. I don't think it took it out, but we were on the verge of new highs there. Silver continues, the gold-silver ratio continues to work. But when Blake was talking about his bull case, and I talked about this wedge, we're almost at wedge completion here. If you buy the belief that wedges can retrace 100%, so this is a pretty good teaching example. The breakout was all the way down here, so for it to fulfill it, that would be 1620. So I hear
Coach,
yes.
Is it some kind of new sexual innuendo? Looking forward to seeing your symmetrical triangle.
Yeah.
No, it's just you, Steve. It's only you.
I really wasn't thinking about that. So you're talking about like
Steve. His mind is constantly in the gutter.
Steve, you should give up trading and do bikini waxes.
Oh my God, no.
What do you think, Blake? Or he should have been a gynecologist?
I really don't have a whole lot to say.
Every time.
Every time
I had 3 hours sleep, so take it away, bro.
Okay. Yeah, I'm actually, I'm a little lack of sleep last night. I went, what I did is I went out and played tennis for the first time, and God, it must have been seriously 20 years, probably the best cardio workout I've had, and played for an hour. And
so you're too wound up.
You played tennis in Arizona in the middle of the summer?
Yeah, it was 106 degrees outside playing tennis, and I don't think I've sweat that much in years. I felt like I just came out of a hot yoga session or something. And anyway,
was that the best Wimbledon you ever saw? That final?
I didn't watch Wimbledon.
Oh my God!
I didn't.
If you could see a replay of it, even though you know the outcome,
Yeah,
it's pretty amazing, Blake.
yeah. I didn't watch Wimbledon because I was traveling, but
yeah, that's right. You're
yeah.
out in the middle of God's country.
Yeah, needless to say, I was extremely. I just didn't sleep too well last night. I inflamed my tennis elbow, but the tennis elbow was caused by golf a couple months ago. It just kind of made it a little worse. But anyway, I should have taken aspirin before.
You're getting old.
What I should have done. Yeah. So you were talking about gold and the symmetrical triangle. We're basically testing it, so you can see.
Yeah.
Right up against here. Let me move.
Yeah.
This,
So we almost got there again and couldn't. Yeah. I was wondering if it got all the way.
Yeah, we're right up against it, and now we've got a pennant building. So you can see this is another pennant that's just built. Now we're not guaranteed to break out here either. I mean, this could very easily just slump right back down. Towards the lows, towards 1400. But I actually moved up my stops yesterday. And took a little bit off the table as we were up towards the resistance, which frees me up personally to buy more above 1430. Above 1430, I get more aggressive. So I'm just kind of waiting on it. One thing that we have to pay a little close attention to here is silver continues to blast higher. Now silver has reached. Let's just put it this way. First of all, we've taken out this trend line here. It doesn't matter how you draw these trend lines. I mean, it's broken. So you can draw it like that. You can draw it like that. You can draw it like, that. It doesn't matter. They're all broken. So what that really signals to me is silver is officially broken out here. And we just completed our flag, or are really close to completing our flag. But as I wrote in the blog yesterday, we're above the 618. We're above this previous support from back in 2018. Now that we're all above these levels, the risk is for a lot higher prices over time. So it doesn't mean that we're going to just go straight up from here. But I think that the bid that you're going to see in these precious metals should be pretty good moving forward. I would be looking at silver as we're probably going to be, trading up towards 20 in the coming, weeks, maybe months ahead. Does that mean that, I'm going to go long silver here and, and just, stay long? No, it's not. I mean, I own the physical personally, but it doesn't mean I'm going to, trade in and out of it. I'll be looking to be long silver on dips now. And that's, specifically as if we close the week up at these levels, it's a bullish sign all the way around. Now, question is, how's that going to play into the US dollar? Because silver, sorry about that. The euro is weak this morning, and one of the reasons why the euro is weak is that the news from the ECB that the ECB is looking at how they factor inflation, and that put the euro under pressure. Then Mnuchin just came out and said that the dollar policy isn't going to change for now, which is kind of a warning to the market that there are risks, in my opinion, that the Treasury could take a little bit a bit of a stance on the dollar, which if we start getting a Treasury that is not supportive of a strong dollar anymore, that would be a huge tectonic shift in the way that the Treasury looks at the dollar. You have to remember, and this is one thing that you guys gotta think about, is Donald Trump is not happy with the dollar's strong nature as of right now. So if you look at the dollar index and you go, over the, let's just call it a weekly chart, you look at the dollar is strong, and it's been strong. It's way before Trump has taken office, but you can see it's been pretty strong since he's been in office. And if he wants to weaken the dollar. And he can't get he can't get a coordinated effort amongst other countries. He could at least navigate his own treasury, and especially his, one of his puppets, Steve Mnuchin. He could have him adopt more of a, not supporting such a strong dollar policy. And if they have a little bit of a shift in the way the Treasury looks at the dollar, you could actually see the dollar weaken quite substantially, even if there wasn't any type of intervention amongst other central banks, or countries. So with that being said, you got to be a little careful with the dollar, because Mnuchin said there's no change as of right now, but he says for now. I think let me see his here. I'll pull up here's the headline. Mnuchin says no change in U.S. currency policy as of now. That's, that was via Bloomberg for a while, or a while ago, a couple 30, 40 minutes ago. Anyway, so it's something that I think it should be on everybody's mind that trades the currency market, is that, one little tweak in the way the Treasury views the dollar, we could see the dollar index down quite substantially. We could see gold up quite aggressively. That would obviously be very supportive of stocks too, near term. So something just to think about. Okay, now the cable. The cable's a little bit stronger today, and we're coming off that descending wedge support. Now, one of the things that technically I look at the cable, and the one thing that I've been thinking about this whole time is, hey, we're not breaching those spike lows from, this is back in January, when we had that really wacky move in Asian trade. We haven't taken out those lows yet. Doesn't mean we can. It's just we haven't yet. So if you're short, you got to be a little careful here. We could make it right back up to 126. 126 is going to be pretty key resistance for the pound near term. Really, to change the whole picture of the cable, you have to get back above this 127.70, which we've noted over the last couple of weeks. But near term, I would say 126 is going to be pretty key, which will be right about here. Now, I'm going to see if Stelios I know is here, but was there some news that drove the cable higher this morning?
There were two items. One was Barnier with the EU said that they are ready to work on alternative arrangements for the border, and we know the Irish border is the main sticking point.
Yes.
So there was that statement which gave the pound a lift, and also we had retail sales, which came in quite a lot stronger. We were expecting minus 0.3% month on month. It came in at plus 1%. But this is a very volatile number. So those two together, I think.
This is the thing that's kind of helped the cable off of these lows. And thank you, Stelios. And as a result, you've seen the euro pound, show a bit of a reversal here. Now, one thing I want to point out about the euro pound, if you go over the weekly chart, this is a big channel, right? This is a big channel. Earlier this week, it looked like we were breaking out. We are a bit weaker as of right now, and if we close the euro pound on the weekly candle, like let's say we finish the week with a gravestone doji, which means the cable continues to strengthen from here, or at least outpaces the euro, that could be a pretty bearish event for the euro pound. And I have not been trading the euro pound. Last week I had an order to sell it at 90.10. And then it didn't get tripped as we were right here. It didn't get tripped, and I just canceled my order. But we did end up going, past it, and then reversed. And this is one of those pairs that I'm a little hesitant to short, just because every time I think about shorting it, and even if I don't, I think about it, I wake up the next day, it's higher, and I'm like, oh, I'm glad I didn't do that. But I think on a weekly basis, if we close at the lows of the week on this pair, that might be worth taking a shot at, but you're going to have to keep your stops pretty wide, in my opinion, and because you're dealing with the cable. So
I was showing yesterday, Blake, we had 11 consecutive up weeks, so it is bound to pull back at some point, right?
You know,
First warning sign would be back above 89.20 in my opinion, and for sure even a loose stop. I think above the 89.51 high is appropriate.
yeah, I mean, you can, you know, I try not to look at the market that way, Steve. Like,
No, yeah, not in isolation. I mean, that's not the only reason, but you know, it is a reason.
But it's the same. If you go to, and I'm just going to use the analogy of gambling here. If you use that analogy when you're playing roulette, you'll get smashed. You can sit there and go, you know, oh, it's been black every time for 11 spins. It's been black. It's going to turn red at some point. There's nothing that says it has to. That's the funny thing is it you know, odds would have it, but you know, that's how people playing roulette get smashed. And I know that things get over, they get stretched. But when I look at like a weekly, you know, relative strength, for example, on the euro pound, it's not even overbought yet. So, you know, I'd have to look at so many other factors other than just being up 11 weeks at a time. But yeah, I get what you're saying.
You got to know when to hold them, know when to fold them, know when to walk away, know when to run.
No one knew when we brought Kenny Rogers with us.
Pits when you're sitting at your laptop. There'll be time enough for counting when the market's closed.
Well, thank you, Coach. That was a great Kenny Rogers rendition. ForexAnalytix Kenny Rogers rendition.
Wannabe Kenny Rogers.
Yeah.
Yeah.
So thank you very much. A couple other things that I want to take a real quick look at is that the Aussie. I mean, we had the headline number was a little weaker, but the full employment came in pretty strong. I took my Aussie off 2 days ago when we slipped back below this trend line. I just took a little loss in it, but I'll tell you what, this Aussie actually is still pretty well bid, despite you know, stocks being a little weaker, you know, and I'm actually quite impressed with the way that the Aussie looks right now. But it'll be interesting to see what happens with the Aussie from here. Now, speaking of the S&P, I'll just talk about this and then I'll leave it with Steve. And I think Steve or somebody has been talking about a megaphone formation, but you know, bottom line is we hit this upper trend line, 127% extension. We've come off, but we're finding some support this morning, or at least some buyers this morning. But we could be developing a wedge. What I'm most concerned with, and I think everybody here should be, is just this breakout point. And the breakout point comes in at you know, 29.60. And because that's going to be really important on a weekly basis. So let me a little bit wider trend line there. You know, on a weekly basis, if we end up slipping back below the 29.60 level by the end of the week, and obviously today's Thursday, so you know, you're talking the next 2 days, and in the next 2 days we could be sitting at all-time highs. But in the event that we slip back below that 29.60 for the week, I think that's going to probably get the attention of anybody who's long, and people are going to start looking at it as a false breakout. So I'm going to be watching the S&P. I know it had a poor performance yesterday. S&P is by trading view, it shows that we're up, you know, 2 points, but Bloomberg says we're still down, you know, slightly. And so if and you can see it here. Here's the S&P futures. You know, it shows that we're down slightly here. If the equity markets close below these levels, then that's going to really, like I said, it's going to you know, raise an eyebrow for me and probably a lot of people in the days to come. All right. So with that being said, I thought I'd bring in my colleague Steve, the mind in the gutter trader Steve, and then Stelios. How you guys doing this morning?
Very well, thank you.
Good. Trying.
Yeah. Have the antibiotics kicked in, Steve?
Yeah, but I've had like a quite intense cough since yesterday, and that doesn't help.
You had an intense what?
Coughing, you know.
Oh, coughing. Oh,
Yeah,
okay.
coughing. Yeah.
Oh, okay. I thought you said you had intense coffee. I have intense coffee every morning.
Oh, yeah.
Yeah.
Without it, actually, you know something. It's unfortunately, I realize, you know, how addicted we are to coffee because on occasion, like on a Sunday that I might not have like a morning coffee, I get a headache. And that's probably not a good sign.
Oh no, that's definitely not a good sign. I know when I try to wean off coffee, I get a headache, and then I say, well, why
Yeah.
why wean off coffee? I'll just drink coffee again. So
Exactly.
yeah, it's stupid. I'm going to self-inflict pain here. Anyway, guys and gals, thank you for joining in today. Remember, Stephen Stelios are going to take you through the next half an hour, and then Coach, you have a interview, I assume. And I don't know where
Yes, he does. Yeah, we do have him.
And remember, if you guys love the ForexAnalytix Face webinar, to continue to support us, make sure you visit our partners at Forest Park FX, which will help you find a broker that fits your trading style, your trading strategy. And if you want to be part of the ForexAnalytix community, you can join the reimbursement program. If you want to just learn a little bit about that, their contact information is right here on our website. It says reimbursement program. This way you can be part of our community and you can help support the FACE webinar. So thanks everybody for listening in, and I'll see you guys tomorrow on Friday. Have a great one.
Good day, Blake.
Thanks, guys.
Bye-bye, mate.
Okay, so we actually we do have some data just in a couple of minutes.
Let me pull out.
Yes, I mean we talked about the UK. There is currently right this moment, actually, I think MPs in the British UK Parliament are debating whether to push this legislation that essentially is an attempt to block Brexit by suspending Parliament. It's a little bit tricky how it works, but anyway, this is something that they're voting on now. And it does seem like they are trying to find a way, one way or another, to try and somehow block Brexit. But anyway, that's just something that's happening. And we saw earlier a couple of reasons why the pound is seeing some relief today. And
yeah, but as always, tell you, if that doesn't work again, we've seen many of those rallies recently, right?
Absolutely. I
mean, some kind of a glimmer of hope that A or B or C can like reduce the chances of a disorderly Brexit or of Brexit or a chance of a new referendum or whatever, and then the market, if when that doesn't work, the market completely retraces.
Yeah, I mean, in my opinion, the main stumbling block has been and will be the Irish backstop, and that's been actually said quite explicitly, and you can tell from the voting on May's, how many votes was it? 4 votes. This has been the stumbling block. So if there is some kind of a breakthrough there, then I think the whole dynamic will change. But until then, the pound should see some pressure.
But we haven't had any real indications that something can change on that.
Well, you get the odd comment like today from Barnier, but really nothing concrete. You're right, yes. So let's have a look. We're going to talk a little bit about the US, but probably after the numbers. So we have Philly Fed and jobless claims. Okay, so
jobless claims, yes. Yeah, nothing. I mean, unless we see some, crazy out of the ordinary numbers, I doubt it that they're going to move the market much. But yeah, regardless, I mean, it's yes. Data that has importance. So let's see what we get, and we take it from there. We have
1 more minute. Yeah, we have 1 more minute.
Yeah. So go on.
Okay. I think the main thing we're going to talk about after the numbers as well is the US, as always. We are at the point. Hold on, just excuse me for 1 second. Sorry about that. I have 2 girls here who are very chatty. My daughters. So we are at the point.
I like the fact that you wanted to make sure that you.
Yes, for anybody
my 2 girls
who's in doubt, it's my daughters. So we have the ongoing issue of the U.S.-China trade deal, and on one side, Donald Trump has been talking about his frustration about China not buying the agricultural stuff that China has actually said are going to buy, And China, on the other hand, they're saying, you have to lift the sanctions on Huawei, the restrictions, and it seems like a stalemate. Okay, let's have a look at the numbers, and I'll discuss this just a little bit more afterwards. So 10 seconds, yes, standing by. Okay, what's the expectation is 5, up from flat.
Okay, I continue jobless claims as expected roughly. Initial jobless claims exactly as expected.
Fed very strong.
Fed. Yeah.
That's
4+ times the expected reading. So yeah, that was a blowout number.
Wow.
Literally blowout.
Let's have a look at the others. Philly Fed employment is good. New orders is good. Prices paid is good. CapEx good. Business good. Everything is better than expected. So those are definitely good numbers from the US. And
yeah, jobless data as expected, but Philly Fed a lot stronger. And we have seen a little bit of a dollar strength coming through the market. We can see it here in USD yen as well. As you see now, Euro USD negative on the day, pound a little bit of its highs. Yeah, we did see an initial reaction, like a few pips higher for dollar pairs or lower, depends on if the dollar is
yes.
But
okay,
nothing to write home about yet. I mean,
yes.
Yeah, I mean, so the market
even precious metals, which tend to really overreact on data, they've done nothing.
ADP Canada June employment, by the way, also a blowout number.
Wow, yes.
30.4K. Previous one was minus 16. Let's see what the USD CAD is doing. Speaking of that, okay, actually USD CAD isn't doing much, irrespective of that. Okay, so the market doesn't seem to be reacting to the data.
That's good. That's okay. It's summer markets. So we were talking about the US and China, and actually there seems to be a stalemate. We all know that, and neither side really is doing much. The interesting thing is that the June surplus number out of China was just below $30 billion, and it is the biggest one this year. So it's not like the trade situation is hurting China that much. I mean, it's not good for either side, but it's not being particularly bad for the Chinese. Just something to think about. We also had Mnuchin, who did say that the US debt ceiling, that's rearing its ugly head again. It's going to be reached by September. So we have to think about what's going to happen there. I mean, the most obvious scenario is they're going to raise it again.
There are a lot of things that just hit all the wrong buttons for me, having to do with hypocrisy. And hypocrisy is like a mainstream thing all around the globe during like the past decade, especially. But why keep something called the debt ceiling when you know that there is absolutely no chance that you're not going to move it higher? Honestly, I mean, why don't they just vote it out? It's completely pointless. There is nobody. I mean, worst case scenario, they're going to shut down the government for what? For a month, let's say. And then, they're going to come to some kind of a compromise. They're going to vote for it to be raised. So, I mean, even the name is ridiculous. It's not a debt ceiling. It's like
we were talking about that in the chat room. Yeah, I mean, when you're running a $1 trillion budget deficit, you're going to need more debt. End of story. So
yeah, and you know what the funny part is? And speaking of hypocrisy, I think that's like the ultimate example. The explanation for why they should raise the debt ceiling is the following: because the US is always a country that will repay its debts, and if we don't raise the debt ceiling, we will just default on our debts, and we're not going to be the good client that we've always been for whoever has loaned us money, and faith is going to be lost, etc. So the question is the following: you have so much debt, and yet you are unable to pay the existing debt, and you actually need to go in debt even more year by year to just repay the previous one. So by raising the debt ceiling, the only thing that is certain is that you make it even less likely that you're going to repay your debt in the future. If you actually want to, be a good debtor and you want to have a chance of repaying your debt in the future, balance your budget first so we can talk about it later.
That's not straightforward, is it? Anyway, you're absolutely right. You're absolutely right. So, and then now the interesting thing is that we are 2 weeks away. I'm just under 2 weeks away from the FOMC meeting, and the market is pricing pretty much a done deal on 25 cut in July, even though numbers have been coming. Many leading indicators have been pretty bad, but you have other numbers like today's number of employment, which are not bad. So the Fed has, they painted themselves into a corner, so they have to cut. But the question is what happens then? And the Fed fund futures curve is implying 2 more cuts and a little bit more, I think just over 60 basis points until the end of 2020. And then it's flat. So the question is, even if they cut and they're not as hawkish, or they show that they are maybe going to wait a little bit or be less aggressive than the market's pricing, that is not necessarily going to be a huge problem for the dollar. I don't think it's going to spark a huge move, because we can easily just postpone the cuts further down. So I remember when I was a market maker in dollar swaps, I used to make markets for exactly these differences. So the July meeting versus the December meeting, and those were very liquid instruments, and I could see how the probability was transferred from one meeting to the next, and it was all priced into one, then they went half and half, and you know how this works. So it's very interesting. If they're less dovish than expected, sure, the dollar should rally a little bit in as a shorter move, but it will depend on what they project for the path going forward. And as we're only pricing two a bit.
With the data we've seen recently, as I was saying the other day, I don't doubt that they're going to cut 25. The market is expecting them to do so, and they will do so.
Yes.
As, for example, they had already regretted wanting to hike in December, but the market was pricing it in, so they went ahead and did it. So I'm pretty sure they're going to cut. But yes, there is a decent chance that the language that's going to come along with the cut, especially if stocks remain at all-time highs, or anyhow very close to all-time highs, might end up being less dovish than the market expects. So yes. Yeah, that should spark a reaction, definitely.
Yes. What I'm saying though is that we could easily pricing just 2 and a bit more cuts until 18 months from now. We could easily just push them forward a little bit. It doesn't necessarily, the market doesn't necessarily have to price nothing afterwards, right? So go from pricing 2 and a bit to nothing. It could move a little bit, but it's we have to I think be careful with the initial reaction, and then we see what the Fed actually tells us what is going to happen in terms of the forward guidance. But anyway, we're only 2 weeks away from that, and it's building up to be a pretty important meeting, I must say. So it's going to be interesting.
Yeah, it is going to be an important meeting. There's no question about it. Okay, anything else, Stelio, before we jump on the charts?
That's it for me, I think.
Okay, cool. So we were talking yesterday about some markets that were on key areas. If you remember, one of them was the cable. Was discussing that cable was testing the confluence of these descending wedges, potential descending wedges support, and the spike low. How that would be, a good risk-reward opportunity, although definitely jumping the gun. We have seen a reaction from here. Now, does this mean that we're headed higher? As I was saying yesterday, only and only if we break above 125.80. That is my point of view. So, yeah, nice reaction from that trend line again. That this descending trend line has proved its significance for the 5th time now. So it is definitely a trend line that the market is reacting to. But from there to turning bullish, there is still some distance, specifically 100 pips higher from where we currently stand. Okay, so nothing really has changed since yesterday, but wanted to start from there since it was one of the markets we covered, and we have seen a reaction. Now, USD CAD equivalently has not produced something. I mean, it had an equivalent picture here. I mean, we possible descending wedge close to a confluence of supports. So It is a market that I'm closely monitoring, but oppositely from what happened to the cable, it hasn't really done much. What has done something important since yesterday, though, and if you remember, we were showing that since the beginning of the week, is that the S&P and the Nasdaq, in essence, broke below those ascending wedges. S&P, a very nice reaction lower, in which case we might see more downside. I'm a little bit cautious because since we broke below the wedge, this is a good first step, but what I really want to see is this previous high, which in this previous little pullback acted as support at 29.58, 29.60, this little area. We need to see that area being taken out and price pushing below it. Then and only then, I'm going to be looking for a continuation and likely a completion of this ascending wedge, as the theory would suggest, by a full retracement. That would point to a pullback towards 29.10. So, bottom line, 29.58 support, a break below there, I think has a very, very decent chance to extending towards 29.10. Okay, the situation with the Nasdaq is more or less equivalent. I would be watching as the next area of support, if we continue lower from here, the 76.80 area, and below that, we will be looking for a full completion of this wedge at 74.60. Okay, so we have had a move happening from stocks. Let's see if we're going to get some follow through. Now, Aussie, here it is, and Kiwi, after like 1 day of weakness, are again pushing higher, which shows that there is still some strength left here. I mean, they look good. Aussie testing once again this confluence of resistances. Keep in mind that this is also like a neckline of this inverted head and shoulders formation. A break above 70.50 for the Aussie is going to be pointing higher towards, let's see where that inverted head and shoulders is going to point to. Something like this. Okay, like towards 72.50 roughly. Okay, that's roughly where the completion of this inverted head and shoulders would be. Now, Kiwi approaching the 61.8. This might act as resistance at 67.65. Now, can the Aussie continue higher and the Kiwi stalling here? Yeah, it might happen. I mean, Dale was showing before, and I have a question here about what is happening with the Aussie Kiwi. Listen, I still see a move lower that has unfolded in a way that is definitely not impulsive. So I wouldn't really be surprised if we find today we seem to be producing a nice reaction before testing again this channel support. I wouldn't be really surprised if we saw the beginning of another period that the Aussie is going to be overperforming the Kiwi. Okay, if that's the case, then we should also be looking for another leg higher, as I was doing so. Previous time we found support here, I thought that there's a decent chance that that was the low. This proved not to be the case. This is another example why I usually prefer to have confirmation. In this case, for example, a break above this descending channel instead of jumping the gun, because sometimes, you see a start of a move that looks promising, but, then for example, we found resistance in this horizontal support resistance area. We never broke above this channel. We pulled back again and we formed a lower low. Okay, so let's see what happens from here. If we react higher and we do break above 1053, 1054, then I'm absolutely convinced that the chances of another leg higher will be very, very, very high. If we break above this channel, I'll probably take this trade, looking for a move higher towards the confluence of resistances that we find at 1083. Okay, so I think that's going to be a very nice upside target. But as I said, I need to see a break above 1053, 1054, and then I'm going to be all for trading it higher, looking for roughly 300 pips. The risk reward is still going to be extremely appealing, because even if you buy the breakout, you're going to be risking like 1.3%, make 2.8%, more than a 2-to-1 risk reward ratio, right? Very healthy, if you ask me. So that's my opinion about the Aussie Kiwi, that we had a question about it. Quick question: how come bond yields and euro are negatively correlated? Okay. See. Oh, what did I do? I double clicked. I hate this with TradingView. So, bonds. Let's actually put it all on the same chart, okay? Let's take a euro chart. And let's take a euro USD chart that we don't have any analysis on. So this one, for example. And overlay. Add symbol. Let me see, can we do this? Yeah, we can do this. Perfect. And this is the inversion of the bonds, okay? So bottom line, it's the yields, because the yields are inversely correlated to the bonds. So now I overlaid here the inverted chart of the bonds. So bottom line, roughly what the yields have been doing. So if we zoom out, a lot, you're going to see that obviously there is a very, very tight correlation. But yes, there is some decoupling here, and you can see it, right? Of course, is this the first period that we see such a divergence? No, there isn't. But you can't really say that they're working oppositely. I mean, you can see some periods of divergence. Let me mark on the chart. Let me annotate. Let's take this. Let's take blue. So clear divergence here. Okay, it's not that they were moving in so much inversely. It's like that, the yields, the Euro USD was not following the yields. I mean, it had, quite a gap. Same deal here. I mean, it's quite obvious, right? I mean, since this period, like a few months ago, we've seen yields move a lot lower while the euro is holding up decently well. But from there to saying that they move inversely, I don't think it's the right way to read it. It's just that they're not reacting to yields at the moment, right? And as I showed you before, here, on occasion, we've had periods that's the case. Now, what can somebody say, though, and that's a good observation, is the following: that any such a period is always going to end up with a convergence again. So the question here is the following: what is going to converge with what? Is the Euro USD going to fill in the gap following yields that imply lower prices, or are the yields going to rebound following the Euro USD, which has held up rather decently? If we go back to this example here, you'll see that the convergence, for example, happened from the yield side. So yields followed lower the Euro USD. Okay, in this example, the Euro USD followed higher to recouple with yields. So what I'm trying to say is that it's not a given which of the two is going to happen, right? So yes, the yields would imply that currently the Euro USD should be lower. And this divergence, this gap is not going to stay unfilled for a long period of time. So it's interesting to know that. So if you wanted, somehow to try to create some kind of a spread bet here, yeah, it would make sense. but I don't think we have enough information to determine which of the two is going to happen. Okay. Thank you, though. That was a good question. So let's go back to other stuff. We have to take out.
Steve, if you look at the 10-year yield chart or the 30, it looks like this pullback that we've had from 215 looked pretty orderly, and we're getting some nice candles in here.
Are we talking about the treasuries now,
yeah,
Coach?
10-year or 30. You know, we're putting in higher lows on this pullback.
Are we?
Yeah.
I'm not sure yet.
Well, the low was 195 in the 10-year in early July.
I'm looking at the bonds.
Then it went to 215.
If you want to have a look at the yields, no, the question here is the following, Coach.
Oh, I know the question. I want your view on yields. You answered that question very well. I just want to know what you think of the 10-year. Simple question.
I think that something like this is very likely.
Okay.
I'm missing one move here. I would want to see another leg higher.
Okay.
That's what I think.
Thank you. That'd be fine. That would take
yeah.
GLT down to about 128 or 26. Thank you, bro.
Yeah. So I would still like to see another push towards like 228, 230.
Yeah, there's a lot of stuff at 235.
Oh yeah. If you zoom back, you can see there is.
That was that last low too before we had a bounce. So okay.
Yeah, and you know, so far.
Any diagonal.
Oh yeah, absolutely. I mean, this descending wedge. I don't know. It feels, anyway I look at it, it feels like there is one leg missing. So I wouldn't yet try to predict lower yields before I see a little bit of a higher move. Ideally, I would want to see another extension higher and then a nice failure. Then I would. I
bottom picked the 3 driver, and I was just wondering how high you thought the target could be before.
I think there is still a chance for higher yields in the short term before going lower. Of course, you always need to be adaptive, right? So, for example, if instead of a second corrective leg, I see something like with great momentum, then I'm going to start reconsidering. You know what I mean? That perhaps we found a more significant low than I would initially expect for. But as you know better than anybody, after seeing such a move lower, you are obliged to first look at any move higher initially as corrective until proven otherwise, right?
Right.
So until proven otherwise, I'm inclined to look at this move as a corrective move. Now, if something different starts unfolding, that's why we're paying so close attention to the structure, because if we start seeing something completely different, then we can reassess. So that's the case. Now, having to do with metals, I know that a lot of people are interested. We're still striving to break above this triangle in gold, while silver is clearly overperforming. And as you see, I think that the market has very, very seriously jumped on this trade, the gold-silver ratio. And this move lower is an impulsive move similar to which we haven't seen in a long, long time. Bottom line, let me make it very clear. This is not done. Okay, this is not done in any way. Meaning any rebound in the gold-silver ratio should be shorted, in my opinion. This is a trade that might prove that it's just at the very, very, very beginning. Okay, so gold-silver ratio, I said it yesterday, I'm repeating it today, seems to be one of the best trading opportunities out there at the moment, which means that silver might continue to overperform. Speaking of silver, silver testing these previous highs. If I go to the weekly, you can see the same trend line that Blake was showing. I have it on my chart as well. Speaking of which, I have another significant trend line. This one, as you see, this one we call, let me turn it purple so it can stand out from the rest. So this purple trend line, you can call it an inner trend line as well, because it has acted as support, it has acted as resistance. This one currently passing roughly from 17, but of course, every single day it keeps moving lower. Soon enough, it's also going to confluence with a 38.2% fib of this move lower, the July 2016 high to the lows at 1670. So we're going to have a confluence soon enough at some point, like late August there. That is also a very, very significant long-term trend line. Needless to say that silver has started violating one resistance after the next, and that is definitely something bullish. That is what a bullish market, that is what a well-bid market is supposed to do. But once again, let me be very, very clear. If this is the beginning of something bigger, we are still very early on in this move, okay? And there is one more thing working in favor of those that are looking to be long this market. There is a lot of skepticism out there. There are a lot of people that have tried to buy silver again and again and again, repeatedly, time after time during the past few years, thinking that for several reasons, many of which are very, very valid and fundamental reasons, silver should be moving higher, only to get disappointed because the moves we get to the upside every time prove to be short-lived, and we might on occasion get a sharp move higher, but usually it finishes like within a few weeks. So I bet that this skepticism might end up fueling a much bigger rally than the market expects. Okay, so silver testing resistance at the moment, roughly here at 1610. This spike higher was at 1630. I think that if we make it above this level, then the next area of resistance is at 1670. Okay, I really don't see anything in between. So I think that silver looks very, very good, very, very healthy. Palladium still consolidating above this support. Still, though, I see nothing really bearish with it. So be careful if you're trying to fade this. This move lower so far has unfolded in a corrective manner. We did test this support area, so I would be a little bit careful here trying to fade it. I'm not saying that it can't correct lower, but I'm saying that I don't really see something that would make me enthusiastically jump on it to the short side. Copper, nothing really has changed since yesterday. Watch this rectangle. Resistance is at 275. Support is at 260, 261 roughly. So, that's the level. And crude, I was expecting that we might have seen another push higher before we fail. We didn't. So I'm really not sure what crude is producing here. It's not an easy to read move that makes me definitely want to stay away from it. I can tell you as a fact, though, that 54.75 should be considered a strong support area. So, trying to sell it, getting close to that area is, doesn't make much sense. I want to see more price action to determine what's happening here with crude. Sorry, I can't be of more help, but, when you don't see something clear in a market, the only help you can offer is to advise to, do and look for something different. Now, yesterday I was also mentioning that if you like the DXY to the short side, you should take that simply because DXY was testing again a resistance, and we did pull back from there. Now, does this make me bearish the DXY? No, it doesn't, because just by slightly pulling back from this trend line doesn't tell me much. But it would definitely make me skeptical and make me hold off before I can, expect more dollar strength. I would at least want to see this resistance taken out, and even more importantly, the 9770 area. Coach,
Yes.
I hear you breathing. So am I
Did you
over?
hear me? hear me burp? I forgot I was unmuted.
I wanted
I
to
have
be
commodity digestion too, buddy.
commodity digestion. Okay.
Yeah, you ever see the movie Trading Places, guys?
You ate too much gold or too much crude?
Did you ever see that movie, Trading Places?
Yeah.
Only a million times, coach.
Okay, well, the bathroom scene where guys are drinking Pepto-Bismol and
Yeah.
downing a bottle of aspirin and who knows what else in the stalls, right? Anyway, I have commodity digestion. So, yeah, we have a great interview today if you're done.
I have actually a couple of more questions.
Yeah, go ahead.
But before that, I wanted to
I'll
say
try not to burp while you're finishing
you
up.
you were talking about Euro Pound, and if you remember, I had said that I would keep a stop loss above 91.
That's where I put mine. Thank you.
Yes. I have to say that if the picture that we currently see on the daily chart doesn't change, what we already have in hand is the following. We have a little overthrow on an ascending wedge. We have a little overthrow from this descending channel. We have an evening star formation on the daily chart, while RSI divergence was still clearly in place, and we're currently testing this ascending wedge support.
Where's the wedge line? What's the wedge line? The base. Where are you anchoring it for a target? Where's the bottom of the wedge?
The bottom of the wedge is down here at 88.70.
Okay, thank you.
So bottom line, I still like this trade very, very, very much. I'm actually about to short this when I wanted to wait for confirmation. Risk reward is still very, very appealing, assuming that you're going to short it at a breakout. You will be looking for like roughly 1.3% profit target and risking something like 0.9%. So better than a 1-to-1. And in my opinion, if we make it below this ascending wedge, I'm going to view this from a personal perspective that like a trade that has like a 70% probability of working out. At least that's my personal feeling about formations like this.
I have like an 87.40 number for my final target, right around there. It's 61.8 back.
We can definitely extend lower towards 87.20, I would tell you.
Yeah, because remember 86.50 was a big pivot on both sides of it. We may not get down there, but that was really a pivot for false breakouts.
I wouldn't be pushing my luck so much, though, because if you remember yesterday when we were...
Steve, I'm lucky when I sit for more than 80 pips on any trade and then watch it drop another couple hundred. I make the tough money and let everyone else make the windfalls.
Okay. Everybody has their own different style. So,
well, it's not a good style. I've been working on it forever. I have a hard time. It's like that statement I say, it's excellent to make a great forecast or call. It's even better to execute and be in the trade. But for me, and I'm sure I'm not the only one, the toughest thing is to have a good hold. I've noticed you're very good at that. When you have something working for you, you know how to, walk away and not mess around with it. And, as disciplined as you are on entries, you're very disciplined with your targets as well.
Yeah, I had to work a lot on it. This is something that doesn't come natural.
It's the hardest, isn't it? Because you want to just take the money and run, like Kenny Rogers. You got to know when to hold them, right?
Yeah, but I have to tell you that once you persuade yourself to do it a few times, then when you see the market reward you for that, it becomes very easy because now you've seen in action,
right?
How much it helps you do well,
right? And you have to create a new paradigm by repeating that over and over again for it to become second nature.
I've done a few things to help me with that. For example, I don't have a trading platform on my computer installed at all. I only trade from my mobile phone. So
that's a good tip.
Yeah. So, for example, I don't look at my P&L at all.
Okay.
Literally, there might be days that I have.
Because you know it could affect you.
I don't think it can affect me anymore, but
Well, then why not look at it?
Because I have it left over from when it could affect me. You know what I mean?
Here's a real good tip, and I've tried it a few times, and it's helped me. That if you're long or short, and you're thinking about covering, ask yourself this question before you cover: would you reverse? And if the answer is no, you walk away from the screen.
No, I totally.
Isn't that a good tip?
I totally agree with you. On many occasions, it is the way to go.
That's really a good tip.
And most importantly, and I know that many people tell you this, but believe me, it's super important. I like to have a fire and forget approach with my trades, meaning I open a trade, I say, how much am I risking to lose here? 0.8%. Okay, how much is 0.8% for my account? That much. Okay, I lost it already. You know what I mean?
Yeah.
That's it. I mean, I've already lost that money. Let's go on. So anything from this point on is a benefit. You know what I mean?
I got you.
So
that's good psychology to
already
write it off.
Yeah, if you start by writing off that trade, saying, okay, this trade has a chance of not working. Let's assume it didn't work. Is it okay? Yeah, it is okay. Let's move forward. Then you're going to treat it more properly.
Okay.
Now, very fast, let me cover this. I have a question for the DAX. So far, I see a corrective move in the DAX, unless we accelerate here. So one leg lower, a little reaction, another leg lower. That is what we drew several days ago here. I think I did. Did I? Let's see what we have on the 4-hour chart. Oh, here is the 4-hour chart. That one I definitely did draw several days ago. So I would expect another leg lower as I did here. It did happen. Now, so far, I don't see something that tells me that this is more than a corrective move. Bottom line, going back to the daily, we tested earlier today the 50 DMA. It held. Even if we move a little bit lower, watch 12,080 as a support area. Unless proven otherwise, meaning unless you see a big acceleration lower, I think still buying the dips in the DAX is the way to go. Okay, I see nothing that would make me believe that the DAX has really turned bearish. Now, I also had a question about the pound Aussie, and I wanted to show this because it's at an important juncture. And then you can start the interview. I had a question about pound Aussie. Pound Aussie, if we take this bull flag, just completed it here at 176.60. Now,
bear flag.
Yeah.
You said the bull flag.
Oh, I said, okay,
yeah,
sorry.
Okay.
Bear flag, yeah. So does this mean that it's over and it's going to rebound higher from here? No, absolutely doesn't. The fact that we fulfilled a target doesn't mean anything. It still remains bearish. There's no question about it. But since, a little bit lower here, we also find the horizontal support resistance area, the 78.6. Be a little bit careful. Pound Aussie has already moved quite significantly lower. It still remains bearish, but would I be shorting it here if I was out of the market? No, I wouldn't. Okay. Watch 178 as support. And one last one, which is the Bitcoin, and I have a very fast comment about it. Bitcoin pulling back. Bitcoin remains extremely volatile. I don't understand how people consider that anything like this can actually be a store of value. But regardless, I'm monitoring this descending channel. We're currently at support. So, if you really like Bitcoin, buying it anywhere between here and 8,900, hoping for a resumption higher.
I said 7 before the breakdown. Remember, we were on the
It might be because if you
when
look
you
at
thought there would be another high.
If you look at it, 7,000 is also a horizontal support area that is quite important.
Maybe it holds here.
Yeah, but in the short term, so far,
okay.
From we've seen a big move from 13,200 to here. So I would be very, very careful. We might not be done moving lower. Okay.
Okay. Forex Gal had a tip for you as I'm going to start the interview now. It's almost 10.
Absolutely.
After. Okay. She said you should change your name from Steve Volge to Steve Volva.
Which means?
Look it up. Volva. VULVA.
Okay. Okay.
All right. Anyway, we're going over to Cobsey now.
Okay, I got the
all right.
point.
So yeah. All right. And that was from a woman. A woman said that. Okay.
I've met
So
her.
anyway,
Very
that's let us know so we could change the website. And Cobsey, thank you for your patience, bro. I'm promoting you to panelist now. So let me make sure that you're unmuted. And there's a screen share as well. I'm unmuting you right now. So should be able to hear you. I know I asked you if you had a mic or a headset so we could hear you.
Yeah, can you hear me, Dale?
Yeah,
Got you, buddy. Got you. And
Awesome.
there, if you hover your cursor, there's a green box that says share. And then
Yeah,
you
there is
can
a
share
green
your
button with the
screen.
pop-up menu.
Perfect.
You can take the screen from me. It's going to ask you to confirm. And then it's going to ask you to choose the screen you want to share. There you go. Perfect. Okay, coach, enjoy.
All right. Thank you, Volva. Cobsey, thank you so much. God, you know, I how many times did I ask you to do this?
I was going to say, we probably started talking almost a year ago, and it's probably well overdue.
Well, yeah, thank you for being here today. And it's first time. Well, no, we've talked on the phone, haven't we? Or on Skype or something, haven't we? Or has it all been, you know, like millennials communicate texts and emails and everything else? Helping
Yeah,
old guy out.
well, you're probably the eldest millennial I know.
I'm not a millennial. I'm a yuppie, but millennials don't like to talk. They'd rather text.
No, we spoke on the phone probably like 6 months ago, but started probably just chatting online.
Okay. So, you know, I'd like to start off with your entree into the financial markets and what was the catalyst? What were you doing before? And tell us about how your trading journey began.
Yeah, that sounds great. And thanks again for having me on. It's great to be on Face this morning. So growing up, I was always a math guy and always interested in the markets. You know, my first work, I got into sell side M&A and capital raising, specifically in technology and financial technology. As I did that for many years, I just started getting pulled back into you know, being interested in the public markets. After working in the private markets for a long time, just slowly got interested in it by checking stock twits and, you know, FinTwit, and eventually got into trading penny stocks, which I think is how a lot of people who are just starting getting traded kind of get into it from a first try. In addition,
how did that go?
You know, just horribly.
Okay.
So it was
okay. That's you know, probably the common answer because, you know, you know what the modern equivalent I believe is to penny stocks, altcoins, because they have nothing to do with the intrinsic value of the coin and of the company. It's all about IR, investors relations, and you know that people actually go out. How do I know it? I did IR for a little while.
Yeah,
people actually go out and they give away their currency as their stock, right? So they could give free trading or restricted, and or cash, and they pay people to come in and buy the stock to create volume.
Yeah, so that's exactly what
dog and pony shows.
I was seeing as well, and I was learning underneath a guru at the time, and it just seemed like he was likely front running a number of us, and only the fastest could really get in on the jump. So the strategy just wasn't working for me. I'm sure there's some people that it works for, but the strategy just wasn't working for me, and the guy teaching me really didn't care and just wanted my money. So it just felt like a huge scam. So after that first attempt, I had to basically reset and figure out, okay, well, what style is going to work for me. ended up finding a new mentor, and improved over the course of years, learning a new style that was more conducive to buying low and selling high, not necessarily buying high and selling higher. So.
And you stayed with equities during this next go round with this mentor?
Yeah, so I stayed with basically trading stocks, and also leveraged ETFs. So just scalping kind of in and out is the style. So I also ended up moderating for him for years.
Who was it?
Service. So he doesn't go by a name, and we kind of had a falling out because as I was working with him, his service started breaking down, and I would always talk with him and try to figure out how I could help him do more, because I thought I liked his platform, but it just became pretty inconsistent. And
you don't want to say who it is. That's okay.
Down. Yeah.
All right. So next.
So then with kind of issues on his site, I kind of realized I should just really be doing this myself. I just ended up doing a lot of the moderating myself with a few others. So I found Guru Haven and started working with them almost a year ago, and teamed up, and I'm running my own service on their site. So
as far as trading goes, Copsey, so your second mentor, technically based, and I've seen some of the calls you've made, I've seen some of your charts on Twitter. Was it books or any other mentor that taught you how to trade technically and had an influence on what you're doing now?
Definitely. So he had an influence technically. We would basically be looking at live charts daily, and then just also from the, I guess I would say, broader FinTwit community, kind of following folks over the years and getting a sense for things to look for, whether it be, I like doing trend lines, and then there's also key price support and resistance levels, and then Bollinger Bands, RSI, MACD, so stuff that everyone uses, just looking at different time frames and figuring out kind of works best for you.
So you're pretty self-taught.
100% self-taught. So
okay. So some people are fortunate that they didn't have to go that way. That's the long and winding road. I believe, here's my belief, is that you can't learn experience. It only happens with the passing of time and living through adversity. But you can learn from the experience that might help you avoid some of the landmines they already stepped on. Do you agree with that?
100% agree. So I think what I learned from just trying to get into it and trading penny stocks, that was, when you're a new trader trying to join a community, it's hard to tell whether or not things will be transparent, and just finding someone on Twitter doesn't necessarily mean that they're actually doing what they're doing. So wanting transparency in a community was big for me.
Community is big for me. I'm a big believer in community building and masterminding. Why do you like being in a community?
I think it's great when you can interact with other people, and I think that when you're seeing other people's ideas and chatting with people more frequently, it's only going to improve your idea. It's either going to push your limits on what you view on a certain trade or a chart that you're looking at, to really make you be able to either defend it or see the other side and be able to flip. I think removing bias from charts is critical. So
that's a pearl.
Yeah. So I loved seeing people that have other ideas than me and chatting, so that I can kind of see what the other side of the trade looks like, just so I'm not missing anything. So I think it's really important. A lot of people, I think online, or especially, the chart looks like this, it can only go this one way. Well, that's not necessarily true, right? So you've seen it a million times. You have to have a plan for if it goes the opposite way. So it's, I think being in a community helps you see more ideas, and helps limit the confirmation bias or recency bias.
Okay, so I see you have a PowerPoint here. What's the next slide? Are there slides or charts?
No, so this is the only slide I prepared, unfortunately.
Oh, okay. So
no, I'm kidding.
What are you seeing in the markets here? Oh, there's your setup. Okay.
Yeah, so
close to another recession.
Yeah, I thought we'd kick it off. I think a lot of people, the question they're asking right now, and what I wanted to focus on the presentation today is, how close are we to another recession or a major crash in the markets? So And based on my research, the answer is yes, we're pretty close, getting close. And I would personally be pretty surprised if the powers that be didn't crash this thing before the U.S. election next year.
Okay, so you think there's a Fed conspiracy to get knock Donald Trump out of office?
I'm not sure if it's directly the Fed, but it obviously would be influenced through them. But I think that there will definitely be. Yeah, I think folks were caught off sides in 2016. You'll be able to see that through the way like the bond market was positioned.
Not Carl Icahn. He bought the S&P's limit down on election eve.
Well, that's why he's one of the pros. So
yeah, well, I bet Carl Icahn also kind of knows before there's going to be a tweet. What do you think?
He could.
Yeah.
One stock I always liked trading with. I think he's heavily involved with some of the rent-a-car companies. I always found it fun trading. I believe it's Hertz. He's been in.
Leave the driving to us, O.J. Simpson running through the airport before he killed his wife. Anyway, so all right, so a lot of people are talking about this being a megaphone pattern, and one of the patterns I teach, it sure looks like a 3 drive to me up here. I guess the question is, and have you seen this before? That red line you have at the top for a 3 drive, and we just experienced it in Euro Pound. Could we have a throwover? What do you do when you're playing? I call this a return line. The trend line is the uptrend line. Any uptrend that you have, it goes all the way back to 08. You have an uptrend, right? So that little line you have up there, how do you handle a throwover if you're trying to short it and it actually breaks out to the upside above that red line?
So I actually have a few. I'll actually get to that point.
Okay.
Back a few slides on that, but
all right.
I think with regards to knowing if we're close to another recession, I think all the necessary items are in place. We have extended valuations, record debt levels, and buybacks. Ever increasing. You see slowing economic data coming in every week. The stuff out of Asia this week was pretty terrible. And then you have tariffs, which I think has been accelerating all these issues and global growth around the world since it's slowing trade. So I think that's sort of been is a very slow trigger. And then the record debt levels and buybacks create the possibility, if the Fed doesn't handle things well once the downturn starts happening, to allow the recession to potentially turn into something more like a depression. So, and I have a few questions on this chart too. So can the Fed, central banks, extend the business cycle? I think it's a very natural process. And I think that in 10 years into a recovery, and technically I think it's one of the longest expansions in history as of this month. So it's been an amazing run, obviously. And then is a rate cut in June bullish? I think everyone's kind of thinking about the FOMC at the end of this month, and I actually be curious to see what you think. But I think that policy execution might prove to be a little bit more tricky than.
What do you mean by that? So they cut a quarter. What's the execution part of it? The statement?
Yeah, so I think that the market's obviously looking for something closer to 75 over the next few months, and the odds of a 50 basis point cut keep increasing. The bond market's saying they certainly could. So it's who they want to disappoint, really. Do they want to disappoint the bond market, the stock market? It just seems like that's the thread and needle at the end of the month, and it'll be a lot contingent on what they promise. I think once they start cutting, I'm not sure they'll necessarily be able to stop. And they could be seeing something in the data that we're not, that seems worse. I think the U.S. data is still coming across fairly strong, but maybe they see it coming, more of the effects of Europe and the slowdown globally coming here in a much faster way.
What about them having one more scapegoat and solution, and that would be sacrificing the dollar, because the stock market is their cash cow for tax receipts. The bond market is the government would have a hard time servicing debt with 4% yields now, and a weaker dollar could make things look okay in nominal terms. you think that's a possibility? There are a lot of dollar bulls out there talking still sharply higher in the dollar. And it is possible that what they're going to have to do is have a direct intervention. You're probably too young to remember currency interventions like the Plaza Accord, but I'm kind of thinking that might happen, Cobesy.
Well, that'd certainly be interesting. I do think the dollar, once they start cutting, will probably retreat to the 93, 95 area at a minimum. But I just don't think that it can. I don't think it'll go much lower than that, just because of because you basically have going on in Europe. I mean, I think it's somewhere close to like 60% of the Dixie is Euro USD. Right. And I think Europe is not going to get better. And I think there's a reason why they brought in Lagarde.
What do you think the reason is?
The whole zone is probably going to have issues, and they brought in a deal maker. There's going to be so they're going to continue
restructure.
They're going to have to restructure the whole thing. I think they're still going to do massive, QE. So I think it'll only get worse. So, but I think they brought in her to do more political motivated, and
I like her hair color. It's like mine.
Yeah,
it's like mine. So sense. Us gray-head, silver-crowned people have a lot of wisdom.
Silver fox, yeah.
Yeah. So why don't you tell us why the 61.8 fib level is so important to you?
Yeah, so some of the technicals on this chart, the fib retracements here, I call out, and the 61.8, particularly important as it shows up a lot in nature. For any of the new traders listening, if you're not familiar with Fibonacci sequences, they're derived from this thing called the golden ratio, which is found in nature and used to maintain balance. And it's funny, I think the 61.8 shows up a lot. You see it, for example, when you look at beehives. I know there's a lot of traders on FinTwit that actually I think are getting into managing beehives, which is pretty funny. But a popular example is beehives, because the ratio of female bees to males actually ends up corresponding directly with the 61.8%.
Oh, God. I moved to California because the ratio of females, at least Jan and Dean promoted that there were 2 girls for every guy out here.
Yeah, no, that definitely works.
Not that I needed the edge. I didn't need the edge. Down in LA. I
don't know about San Francisco.
Oh, yeah, that's a little different up there. Okay.
Yeah, exactly.
So 61.8 comes in where, at the 2150 level? Is that?
Yeah,
2110.
12.2 thousand. So it's that was actually where the initial bounce back following the housing bubble, where we peaked out and then dipped back down and basically put in a bottom. So
okay. 1560 is your target long term.
Yeah, then looking at the 61.8s to the upside, you can see we stalled out in 1516 at the 161.8%, and we're currently testing this 261.8%. So I think it's a significant level here. I would be.
And the eclipse this week, maybe I've seen a lot of important turning points on eclipses. So how are you playing it, Cobesy? Is it futures? Is it ETFs? Is it options?
So I play it through a combination. I'm mainly trading the ETFs, tracking certain sector indices, trading the 3X leverage ETF off of that. And then also through options.
What sectors are you most bearish with in the ETFs? Could it be? Go ahead.
Yeah, I think my favorite is probably biotech coming into an election cycle. And it's really, the IBB and XBI have really lagged. You've seen a lot of biotechs who aren't getting acquired, who I don't think are doing well, or, doing offerings. And you're seeing this become a trend. So I'm expecting going into an election cycle. And if the Democrats are somehow able to win, I think it'll absolutely get annihilated. So I don't think that necessarily has to happen for it to do poorly, but that's just one of the ones I'm more focused on.
So how with your outlook on the markets and possibly the economy, can I ask you how you remain optimistic and pouring energy into wanting to build a business? That we might be entering a crisis of the kind of degree that you're talking about?
Yeah, I think that, a lot of people are going to want help, and I think that the rise of passive investing is probably going to catch a lot of folks off sides once things really do hit the fan, and you'll see a wave of more active investing coming back. So I think playing.
Yeah, everyone thinks they're a genius when things are going up forever. Is that what you're
exactly?
saying?
All my money is in. Most people probably don't realize is most of their money is sitting in Microsoft going up. So it's it's. I think
looks heavy to me
want to
too.
manage. Yeah, I think people will want to manage stuff more actively, and I think that's something that you've seen. And hopefully,
that's already happened in
markets
2000.
pull out. So
in 2000 and then 2008, especially after 2008. But even after 2000, I remember after the dot-com bust, people started to say to themselves, Cozy, you know what? If anyone's going to lose my money, it's not going to be a salesman who says I'm okay being in, 25% bonds, 35% stock. Yeah, I'm gonna make my own mistakes, and that increased after 2008. And if this is a third go around, yeah, I could see that happening as long as people have money left.
Yeah, so that's what I think is likely to happen, and that's why I think communities like like ForexAnalytix, Haven, and the likes are going to be important. I think because it's going to help a lot of people and be a place for people to come and learn, and if they have been very inactive and complacent, a place for them to kind of learn and be more active about managing their wealth and money. So
okay, so unless you have another market that you want to cover, why don't you tell us about Guru Haven, where you've published some of my videos?
So I actually have a bunch of stuff to flip through here.
Oh, okay. All right.
I'm not sure if that's right. I don't know if there's a time limit, but
no, there isn't. Go ahead.
Okay. How about I'll try to flip through some of these really quick, and you obviously can jump in with any questions. I think it'll probably take like 20 minutes or so, if that makes sense.
Go ahead.
So we're just wrapping up this slide, looking at the technicals on the chart. Obviously, we just talked about the fib levels. Other things to note, the Bollinger Bands, we're at upper Boley, so we're actually over it. This happened in April 19, right before May, and also in January 18. Those are the two most recent times. Looking at the trend lines, Dale, you pointed out, we have these ascending magenta trend lines with some confluence around that bottom.
We're still seeing the original slide.
Yeah, do you still see it?
Okay, yeah.
So if you look at right over here, you'll see a confluence of support.
Oh, okay. Yeah.
December low near the 50 MA as well as lower Boley, and the confluence of these two trend lines, one off of the housing lows, and also right at the peak of the housing bubble as well. So I'm expecting a drop. I would expect a drop if we were to get one in the near term, to probably not be able to not go lower than 2,500 or so. I think we'd see an initial bounce back there. I think we could get a swift drop there if history is proven correct. If we get something similar to January of last year, October of last year, so. But I wouldn't expect a drop much lower than that initially. I think there'd be at least a dead count bounce there, and I think that 2,100 is still possible by the end of the year. Granted that for that to happen, things really do need to turn in the coming weeks.
Okay.
Looking at the NASDAQ, obviously, as I said, tech has been driving a lot of the moves. So when you look, a lot of people looking at S&P 500, they're obviously also looking at the NASDAQ. What's been the primary driver here? You have the FAMANG. I always put Facebook, Apple, Amazon, Microsoft, Netflix, Google. A lot of these have been driving these. And looking at the NDX monthly here, you can see there's massive divergence in play here as well, just like there was on the SPX monthly. We have a rising channel similar to what you saw here. The dot-com bubble is obviously very, very steep. We have a rising channel here as well. RSI in a very similar place, and also kind of having a rebound similar to what happened after the first warning shot in the dot-com days. And MACD also, I'm looking for another point to be disproven, to basically say there's more upside in this market, maybe in a substantial way. I currently don't see it, Dale, but one thing I'm looking at is if these monthly MACDs recross and confirm, that'll have me concerned about a potential move, because that's basically what you saw as well in the 1998. You saw this on SPX, just to flip back onto this slide. So that's something I'm wary of and watching.
Great market tell for you, the monthly. So I think it's cool you use a telescope. Yeah, I'm sure you use a microscope too, but telescopic
so
views are really key to what you do when you drill down, don't you think?
Exactly. I think monthly, weekly, and daily are likely the most important time frames, especially if you're swinging. If you're trading intraday actively, obviously, I like to look at the hourly. Is probably my.
Yeah, I go from the monthly to the tick chart. I'm kidding you. I look at the monthly, I get my bias and trade a 5-minute chart.
Yeah,
anyway, that would be crazy.
That's the right way. You gotta start zoomed out and then zoom in, like you're saying.
Okay, buddy.
But yeah, so I think recent history, a lot of people have recency bias because they don't necessarily think maybe something like the .com can happen.
Wow.
But right now, the technicals are set up most similarly to the .com bubble.
Yeah, even your midpoint, almost looks like a pitchfork. Your midpoint magenta line is 50% or more.
Yeah, right. So I think at a minimum, you'll see, the bottom of the 2015, 2016 range when we had that deer market.
Yeah.
So, and I think that could come faster than a lot of people realize if you get something like this.
Yeah.
So it just depends. We'll have to see if all this stuff actually does cross over the next time and we fail on this support trend line that it's held for years since 2011.
Yeah.
So
okay.
Zooming in again, I mentioned Microsoft. It's by far the largest stock in the world. It's 4% of SPY, 11% of QQQ, 20% of XLK. If you look at that text, even more tech-specific ETF, QQQ is kind of like XLK, but with the Amazon kicker. So, and not only 401ks are in here. Everyone's in here. The central banks. One I check decently often is Swiss National Bank. It's one of the more powerful central banks. They have 2,500 positions, 100 billion under management, and 9 to 10% of it is in Microsoft. So, and almost 30% of it is in the FAMANG names. So, looking at this weekly Microsoft chart, you can see we have an ascending wedge, declining volume, divergence in play, not confirmed since there's no MACD cross, and potential for this week to bearish engulf on the looking at the candlesticks. So obviously this is an important name.
Great look.
Yeah, and tonight is very important for this name.
Earnings?
With that earnings, yeah.
Oh man,
it'll be
interesting. You're even better than I thought you were.
I'll take that as a compliment, Dale.
You're my trading warrior brother.
I know.
And I love your looks, and I've retweeted your stuff. But really nice presentation.
Awesome,
okay.
Thank you. Appreciate that.
Okay, buddy.
So yeah, if, I think the implied move tonight. You correct me if I'm wrong. I think it's like 3.5. So
you mean that's what options are predicting at 3?
Yeah, exactly.
Okay.
So I think that we can maybe see a 13 EMA on the weekly test, 50 daily moving average, and we actually closed yesterday below the 13 daily moving average. So that's the first time that's happened. I think all of June or since early June.
Predicting earnings. Let me ask you this: I try and really pare down positions, but before things like a Fed announcement or an NFP, do you take positions like in individual equities like Microsoft prior to such a big earnings report, or do you try and react to it or stand aside?
I more so try to react to it, stay on the side, because I think that earnings is
it's roulette.
As close to gambling as you can get.
Yeah, isn't it binary?
Yeah, so I mean, every once in a while, I think if there's a great setup, maybe the monthly, weekly, and daily are all overbought. Maybe you could try for, if something's really, really, really run up into earnings, you could try for.
I would only do an option,
but
I
wouldn't ever try to build a position into something like that. But even playing put options, I mean, it's gambling. So if it goes the wrong way, next day it's 0. So at least you define your risk and know what you're doing.
Options are like relationships. 90% of them expire worthless.
That's a great saying.
But I think you're part of the 10%, bro.
So
why don't you move on?
So yeah, so that'll be interesting to watch Microsoft tonight. Very big. And so what to look for on a pullback here that I'm thinking that we're going to get soon. We have a large ascending wedge, and this is XPX weekly here.
Okay.
Will be key to watch to see where we break out of this. Do we break to the upside, kind of like you mentioned, it's possible, or to the downside?
Right.
I'm seeing a pullback. Maybe we'll test the 50-day moving average here on SPY, circa 2920, 2900, and I think that you could also probably test the bottom trend line there. Since it's only touched twice, I think that you'll probably get a reaction. I would think you'd want to see a third touch of it to firm up the trend line more so, and then probably a back test of the prior topping area from last fall and what we had in May. And if that were to fail, I think that's when you kind of get a major breakdown, and you have that move that I was talking about towards 2,500. Which is also where the 200 EMA on the weekly is, and that held pretty well in December, as you can see on the chart right here. And then it also served as support in early 16 on that dip as well.
Okay.
Before we moved up for the end of the year, so that's something to watch.
Nice roadmap. Take a screenshot, everyone.
Yeah, exactly. And then, and if you think about how a bullish scenario would take place, and I haven't drawn it here on the chart, but if we break, 30, 50 or so, and start getting significantly above this upper trend line, you'd have to, and you see a back test and a hold of it, you'd have to think that there would be more upside for the market. And while I don't think that's not my primary case, I think that if the Fed were to start cutting and the data did turn around, they could be inflating the bubble even more. Right. So that's something that you have to think about. I think that they're cutting into economic data that's going to continue worsening, which is typically how a recession is officially starting. So, but a
lot of people don't realize the lag time between what the Fed does and how long it has impact. I mean, we're still doing QT until September, right?
Yeah, exactly.
So the effects of QT, which has been going on for a long time, and the series of interest rate increases are just starting to have impact now.
Simple Trends a lot about.
Who talked about that?
I talk with Simple Trends a lot about that. He tracks the
He's
QT.
A Fed watcher?
Yeah, he's an avid Fed watcher. So it is pretty incredible that they're just stealthily doing QT. So they're still theoretically removing liquidity from the markets, although the Treasury does a lot of work, I think, to offset that. So it's
Mnuchin's a busy guy. Now he's talking crypto. So okay, buddy, what do you have next?
So we just reviewed the major charts, SPX, NDX. It's important to kind of look at a lot of other key drivers or markets that you could basically view as an indicator to help determine, when and where this major move will happen. So something that I want to go through this morning is Bitcoin, the VIX, small caps and transports, the bond market, and crude oil. And I post a lot about these actively on Twitter and StockTwits as well, and I'm always talking about them actively in Guru Haven. So going through these, first we'll look at Bitcoin. I don't trade crypto, so just to call that out. But since it's and that's because I think it's a pretty controlled market. It's owned by a handful of people. It's very concentrated. So at times it can be less liquid, and you can get hit with a whale selling, as they say. And I think it's no coincidence that you see Coinbase crash every single time it's going down. So it's I use it as an indicator. Maybe someday I'll be a buyer, but it's right now it's looking at the chart. You can see we basically topped out here recently at the weekly closing high that we had following the first major drop, following the blow off at the end of 2017. This 11.5 thousand has really held as strong resistance, as you can see here. Look at these wicks flying over it as well. So that's something I've been looking for. And you also have a divergence on the weekly and also in the daily in play for the first time since the last parabolic rise. So Mainly just tracking, I believe. I think you guys were just talking about this earlier as I joined. So I think we're gonna see a test of this 7.6 level, and what happens there, I think, will be pretty critical for if this rally has legs, and if you're looking to get long, I think that's a good place to get long. You could probably try to add at 6 if it were to get much lower than that. I think that we could be going back down much lower, so something to be aware of. But I think it's a good sign of risk appetite. You saw in January of 18, November of 18, drops in liquidity signaled by Bitcoin. You can see that there are significant breaks of, this was a break of the 10,000 support, this was a break of the 6,000 support, and they both happened basically a week before the market started having more downside as well. So I think it can really be a good gauge for risk on, risk off.
Very interesting. Market tell that leads the market.
Exactly.
Give by a week. That's
by a week
good.
On those, yes.
Okay.
So it's something. If you see Bitcoin fall out here and start heading towards 7.6. I think it'll be a sign that we could get a decent pullback here. I think if it holds 7.6, it could be somewhat telling. So it's something to watch in coming weeks.
Okay.
Next, looking at the VIX, large moves by the VIX have typically come, as you can see on the chart, from these descending wedges.
Yeah.
So, and MACD is pretty close to crossing something I'm watching now. There's no divergence in play right now. Typically, there's been bullish divergence.
Well, would have had to make a new low, but there was divergence.
Could make a new low.
When I look at the VIX chart and I put out to some of my mentees, it's a fourth higher low with the market making 4 successive higher highs.
Yeah, it's kind of hard to believe. I don't know if many people realize.
I mean, if that's not a message, that's not a message, I don't know what is, right?
Yeah, I was in a big reaction the past 2 days off of the magenta trend line again, which is
2-week reversal if we close up here too. Okay, so nice looking VIX. It's a time bomb. Is it as much of a time bomb as it was in 2018 when people were short VIX products? Are people as short?
I'll never forget that.
Are people as short now?
This is something I talk with the other gurus on Guru Haven a lot about, and people that get into COT data more so than I do. But the levels are extreme, so I think that there could be a potential move like that. I think that because of the
why are people buying insurance when it's cheap? You buy insurance on your house, not because you hope to collect, but because you hope to protect.
Exactly.
Wow, I just made that up. You don't hope to collect, you're hoping to protect. And with the VIX down here, protection's cheap, right?
Exactly,
Insurance on sale right now.
Exactly. So I think if we see a break of the 15 was support for a while and really did hold until it dropped off in early June. So I think if we clear 15 and then you have the 200 daily moving average at 1580, well, if you get over there, then I think we can really have, if we close over, we could have a good chance for some increased volatility to come. So that's something that I'm watching. And I would say, Dale, that you probably were a songwriter with how you're making everything rhyme so easily.
I was, yeah. I ever hear the group The Hands of Time?
I was going to say in another life, but you actually are. So
The Hands of Time, yeah.
That's awesome.
Yeah, Old Orchard Junior High. We won the Battle of the Bands there.
You'll have to send me some YouTube videos.
Okay. Oh, I have some recent ones. I do a pretty good Elvis. Anyway,
Awesome.
So, all right. So small caps. So Russell been lagging dramatically in the last several months.
Yeah, and people why watch the small caps. I think they're a solid indicator on how America is doing, as they're not large, they're not multinational. They were the leader up in 18 all the way through September, and they turned down a month before S&P 500 did, and broke out of this ascending wedge that they had. which was a sign then that there was weakness to come. So it's they're still down 10% off the highs, while meanwhile the S&P 500 was able to make new highs. So looking at the chart specifically, we closed below recent support yesterday. The recent low was 154.22. We actually closed below it yesterday. And this has really been a tight one to watch. Trying to figure out which way it's going to go, but my bias is that we come down. We'll probably test this blue support trend line. We'll probably see a bounce there, similar to what I'm expecting in SPX. See a bounce and then have it basically fall out, and you basically have a potential for something like this to happen. I believe.
Okay.
Something similar to the fall.
A beautiful symmetrical triangle.
Yeah, I think you'll like this one. So the transport's also a big one to watch, obviously, and there's a lot of news yesterday. CSX, railroad company, was down big on earnings. The commentary from their CEO was a pretty staggering, and he's someone that's worked in the industry for I think it was 20 years, and he said he's never seen. He can't explain the slowdown. He's never seen something like it. So it's transports are a good gauge of trade and economic activity globally. Historically, have worked to warn, and that's why the Dow transport theory was coined. But you see people on CNBC and people asking, is this still really a good indicator? And I say, let's just look at the chart. So there's a pretty big blue head and shoulder pattern with a descending neckline. It's about as bearish of a pattern as it gets. And have we seen this before? Flipping to the next slide, it's exactly what we saw not too long ago, right? Yeah. So you can see that recency bias probably has people thinking that the setup doesn't really mean anything. Meanwhile, this was the exact setup we had 6 to 9 months ago, and you can see technically if you break a descending neckline on a head and shoulders pattern, it can get pretty ugly. So it happened right before the huge fallout in December for transports. Yeah. So
nice look. A lot of triangles popping up, symmetricals. It's interesting when you get a lot of the same formation in different instruments. It's kind of a theme.
Yeah, it's something I've actually been seeing across a lot of them. Netflix, for example, had a big one that obviously broke down out of it.
Everything
Amazon had
compressing for a resolution.
Right. Yeah. Okay. And it's all most of them come to a head, later by October. So, and we'll see where we are there by then. But typically, seasonally, October has been pretty rough the last few years. So, something to think about in terms of seasonality and timing wise. Okay. But interesting to see that on the transports, this very similar pattern is potentially playing out here. Okay. Something definitely to watch. Zooming into transports, I like to look at FedEx. They're one of the larger transports. The CFO in the last earnings cited, global trade and industrial production slowing as reasons that they've had issues. You can see that there is a massive potential overthrow here to get to that 261.8% fib level on this chart. Had a ascending wedge in play, which it technically broke down out of earlier this year, rose out of, and then was able to get back below, and has recently backtested. Actually, just backtested a few days ago, and the chart basically had a 15% bounce off of the lows, which is pretty significant. Back in the in 08, 09, they had I think closer to like a 30% bounce here. When we had a similar signal. So we've had a pretty significant bounce here. And you can see what I'm looking at. The main thing I'm looking at in this chart is you have a very rare signal in terms of the 13 EMA now crossing the 50. The last time, so this has crossed in July 19, pending a major reversal this month into that month end. That'll be confirmed. Okay. The last time this happened was in July 08, which that basically was a huge red flag then, and the stock went down 60% over the next 9 months. Then if you were to see something similar here, you'd basically be seeing FedEx go back down to this major support level, down in the low 60s. And there's also fib support
And that's where we were in '08.
Exactly.
Okay.
So something
what
I'm
else?
seeing, and it's I think it's worth watching because obviously it's huge for trade and in the global economy. So if you're looking at transports, a good double click in is to look at FedEx.
Great tip.
The bond market, I know you've been all over this, and me and you have discussed kind of thoughts here, but could it be calling equities bluff? So it's the bond market, separate market, and much larger than the equity market, but correlated from an asset allocation standpoint. Looking at this 10-year Treasury index, the monthly chart we have here, MACD crossed negative in June, which is pretty rare in recent history. You can see it's happened 3 other times. This is the 4th. The other times it has crossed have preceded some pretty significant periods, the bear markets of the dot-com and housing bubble, and then the deer market of 15 and 16. And we just had a cross happen now. So, and also on this chart as well, similar to the FedEx monthly, you have the 13 and 50 EMAs close to crossing. And that the last time that did that was in November 17. So something definitely to watch for. 2050 or 2.05% is the support trend line I have. We closed below it last month when we closed at 2%. And you can also see lower bowl in Japan is opening up to the downside, which is generally a omen that this thing could be going lower. So I think that once the Fed starts cutting, you could see this really, if they have to start cutting, I think they'll keep cutting, and you'll basically see this go down.
Okay.
Test this other support level
Nice
near
look.
1.4. So
okay, retest of historical low yields.
exactly.
Okay.
Looking at the bond market, I also throw copper in here to see if it agrees, since it's also a pretty good indicator of economic health.
You know, Dr. Copper got sued for malpractice.
Yeah, the bulls aren't happy. Yeah.
He was impersonating the bull market.
Oh my gosh. That was a good one. I like that one.
All right. Okay, go ahead.
I have to steal that. So looking at this chart, just looking back 4 years. So this is basically going back to July 2015. You can see the bond market the bond market historically, since it's much larger, is thought to be usually right. And global elites, I think, got caught off sides by Trump. They didn't see it coming.
What's bigger than the bond market?
I'm not sure.
Currency market.
Oh yeah. Sorry, I thought you were going to make another joke.
No. Once in a while, I'm serious.
No, yeah. Currency market is obviously the largest. So you can that's something definitely worth watching. We could have a whole presentation going through currencies. Obviously, you guys cover that every day on ForexAnalytix. So it's but yeah, looking at this one, copper was the early signal back in mid 2018 that something was wrong. It really fell off and didn't participate in this high into the fall period. You basically saw SPX catch right back up to copper by the end of the year.
Yeah.
Right now, copper has not.
That was my tell. S&P is rallying to new highs, and copper only retracing 38%.
Yeah, exactly. So I mean,
back,
and it looks. If you look at I post copper charts on Twitter, Drew Ravenoff, and it's looking like it's potentially bear flagging. We'll have to watch to see if it holds. Maybe Dixie can put a floor in it. It's unclear, but it's definitely there's definitely a big gap here, and maybe copper comes up a bit, but likely it would coincide with stocks also coming down.
Okay.
And then looking at the 10-year, it's even far bigger, a larger gap. You can see that the 10 years implying SPX could be down by, or should have been down near 1820, based on this chart. And it'll be interesting to see if that's something that's possible in the near future. But there's definitely red flags. So I think if you don't think there's anything out there that's signaling something's wrong, it's there's definitely the bond market and commodities with copper. We'll go into oil lastly here in a second. And obviously the other indices we've covered here that are presenting red flags.
Yeah, you're presenting a very strong bear case. If you were an attorney, you would the jury would go your way after listening to this.
Oh, that's great. Hopefully, it's not a jury of the 12 bears of Fintwit. So hopefully, it's. I think that's all that could be wrong.
It's Peter Schiff. He's on the. All right. So anyway, yeah, go ahead with this.
All right. So last chart here. I haven't posted actually. This is a new chart. I haven't posted a weekly crude publicly. Update the daily pretty frequently for everyone, all my followers. But I think crude is really important to watch. I think the correlation between S&P 500 and crude is kind of dwindled. It really was tracking pretty well late last year. You can see it had the same type of sell-off, and you would argue it was far worse than the sell-off in stocks. Crude you can kind of trade, and actually the way I think about trading crude, Dale, and I don't know if you've thought about this, but it's kind of a way to double your money, and if you're trading stocks, because the percentage moves are typically
Bigger.
Bigger. Yeah, exactly. So something to think about if you're into oil or trading oil. So, but geopolitics, weather have made it very tricky in recent weeks. So we've been bouncing around. I think I try to drown out that stuff. What's going on in Iran, what's going on in the Gulf with the weather and hurricanes. And so you're
with the bears looking for $30 or.
Yeah, I think it looks. I mean, this chart just doesn't look bullish, right? So I mean, it's you back tested a major channel.
Yeah,
that's what we have in here. Yeah. If you're not aware, the exact high was
61.8,
6.6. So I mean,
yeah,
devil's high, and also exactly what you're saying.
Yeah,
in terms of a fib retracement, or to throw that on here. But I think it's pretty, and market makers, I think across all markets, just like to mess with people. So
they mess with me. I was shorting rallies back to 58.5, 59, and got blown out. So I've been in an IDK mode, but the bear case is definitely building again this week.
Yeah, and this 60-70 level, I don't know. I don't really see it called out too much, but I think it's actually really important. I posted on the dailies. It's an important fib level as well from the recent fall from the highs last year to the lows in December. But this 60.7, you can see, was a closing resistance back in 15. And you can see it's kind of where we're stalling out now. We overshot it, which led to this upside and the back test of the ascending wedge here, ascending channel. And now we've basically retraced back down, putting in a new trend line here potentially. Looks like we're rejecting the 60-70 level. If we bearish engulf, which there's the chance this week that the S&P 500, NASDAQ, crude, all bearish engulf. We'll have to see how today and tomorrow go. I think that'd be a pretty ominous signal for potentially more downside next week. We'll have to see. But
next week the Mueller crash, huh, bro?
Oh, I actually haven't really been thinking about the Mueller stuff, but maybe markets that'd be pretty silly in my opinion. But but I think a 52 test will probably be coming on crude to test that trend line and lower maybe even the lower bully at around 51.30. And if that were to go, I think if you lose these lows, if you're trying to be patient shorting crude, if you lose these lows, that'll be the sign that we're probably going to do something like this.
Okay.
So let's see. So that's basically all I wanted to cover today, and thought maybe leave something for us to discuss next time. Obviously, you mentioned the currency markets, largest market in the world, U.S. dollar, important to watch. Gold, if that breaks out much higher, is the Fed losing control? So we'll have to see what happens there. I don't think it's quite the generational buying opportunity in gold. I think it could obviously go higher here. I think it's basically been breaking out of what looks like a bull flag, and miners are really flying the last week. So it's that's something that's definitely interesting to watch. Boeing and Deutsche Bank, and I think these are two problematic companies. Boeing is probably the most problematic in the U.S., the largest company in the Dow, and I think there's huge problems there. And but it's hard to be a short of Boeing because you have to remember the whole. Boeing is actually a small percentage, or a decent percentage, even though small, of U.S. exports. So they have a lot of government contracts. It's really backed by the U.S. government. So if there was a lot of wrongdoing, and I think it's blatantly obvious that there was with regards to the 737 MAX, it's going to take a while for it to play out. But on that chart, looking at long term, that's one of the more wild charts, similar to Microsoft, where it's just vertical. You look at a monthly, you could think you're looking at Bitcoin. So it's I think I won't be surprised if in a year or two some of the bad things that they've been involved with, putting passenger safety at risk, comes to bite them, and that stock gets cut in half, if not more. Deutsche Bank, that's already been really struggling, obviously, and that's pretty well known what's been going on in Europe. They're obviously important to watch. Economic data, do manufacturing, housing, GDP, stuff we see over the next few weeks. Does this all continue to worsen? It's something that we definitely have to watch to see if any of this is transitory. I personally don't think it is, as data was starting to roll over prior to the trade war starting almost a year ago. So I think it's part of the natural cycle, and I think cycles matter. And then if you're unclear what could make the recession really hurt and what could really lead to the potential of a depression in coming years, something that we haven't maybe seen in 90 odd years, it's corporate debt and corporate buybacks. I mean, they're the main issue. So they're at record levels, and for example,
basically they have leveraged position on their own company.
Exactly, and and I don't think they're buying near the lows either. So I think that it's going to end up being a huge waste of money. You've seen CapEx pull back for corporate buybacks, and that's not helpful in terms of if you're not spending money to invest in your business.
That was a tax cut, financial engineering.
Yeah. So the tax cut obviously gave a huge bump in the general markets because of the value it created for these people to use. But I think they've primarily used it for buybacks, which are a very artificial way of supporting a company's stock, because you're basically, it's short-term gain, potentially creating long-term pain. So because you're not investing in the future growth of your company. So, so that's those are maybe things we can discuss next time, reviewing a bunch of other stuff.
Okay.
And we've kind of already talked about Guru Haven, but that was going to be the last stuff I talked about. Dale, do you have any questions or anything you want to talk about with regards to
no,
kind of the stuff I presented?
No, it was a great, very compelling presentation. One of the best bear arguments I've seen in a long time, backed up with a lot of evidence.
Thank you very much. Hopefully this page loads. But I just wanted to basically end with if you like hearing me talk, which I know most people don't, you don't have to listen to me talk. You can chat with me online on Guru Haven more actively if you follow me on Twitter. So it's I think an awesome community we're forming. It's basically, we run it on a workspace. Here's an overview of it right here. We have 4 of the gurus. I'm one of them. Dale, I think you've been in here before, maybe checked it out.
No.
But Crush the Market out of Sydney, Simple Trends, another American, and Trade with Hedge out of the UK, London. 4 of us currently in it every day, chatting with a bunch of people, and running our own services, and then also have free rooms as well. I'm the only one that currently is charging, so everyone else is free as well. So it's a lot of free content on the site, and I offer free trials for a week or 2, so easy to get on and chat with me. So it's what's
the mission?
I think the mission is just I think if what's the point of winning if you're doing it alone? The mission is to help other people fight the 70% of volume that is algos and actually kind of figure out how to trade in and out and be able to make
Great mission.
90% of people lose 90% of their money. It's because the whole system is rigged against the,
Yeah, I don't know about that stat. I've been hearing it for 90 years.
Yeah.
So anyway, but
Yeah,
so
the positive
your
stuff.
mission is to serve others
Exactly.
while serving yourself, not just being self-serving.
Exactly. So it's
Okay.
what's
I think the best way for people to follow you on Twitter, check out Guru Haven? Why don't you give people your contact information?
Yeah, so you can follow us on Guru Haven. Our Twitter handle is Guru Haven HQ. We put out a weekly newsletter. Dale's on it, a frequent guest contributor on it. We try to talk to we basically put out content from Guru Haven, all the gurus on it, as well as all of our good friends on FinTwit. We'll have guest appearances. Dale's on it all the time. So that's something we put out weekly. You can look for. We post that on Twitter very early in the morning on Tuesdays. It comes out early to our members on Monday night. If you get on the site, it's free to join the site. You can join the site by just going to our website, www.guruhaven.com. That's kind of the overview on us.
Okay.
And I think that it's important that communities and folks like ForexAnalytix, Guru Haven are popping up. So I think it's with what is to come in the future years. I think it's going to be even more critical to have a tight-knit community, really have a good understanding of what's actually going on, because a lot of it's going to appear it's going to come across as crazy, but it's some stuff, nothing new. Things have definitely happened, like what's set to happen before in history, as I pointed out on the charts. So
okay, well, I want to thank you for being here, and I wish you much success with your company Guru Haven, and the pips fall down and rain down on you like like a wave, like a tsunami, just overtaking you.
When it rains, it pours.
Yeah, taking over you and everyone who your words touch. And Cobesy, glad that our paths crossed, and wish you all the best. My trading warrior brother, Cobesy.
It's been absolutely great to connect and chat with you more and more. So glad we've become good friends.
Yeah, and good luck on your scenarios, and we will have you back, see how things play out, Cobesy. Again, that's going to be a wrap. Everyone know how to follow Cobesy, and remember, most of all, regardless of what happens in the markets, don't just count your pips, count your blessings, and we'll see everyone to wrap up the week, TGIF tomorrow. Adios, and thanks for your attention. And thanks again, Cobesy.
Thanks, Dale.
Adios.